Welcome to this new episode in Kotak Stockshaala. And in last video, we learned about some of the very powerful concepts around growth investing. We learned about what are the different parameters you need for a growth of the company. We also learned about the tornado phase in this company. Now that was more generic from a company perspective, like how company behaves. So let's dive into this presentation and try to understand from the terminologies of stock market how it makes sense and how the company is actually behaving while it is in that tornado phase. So if you see in this company, a point one is very early stage where there are some triggers. The company is about to go in tornado phase, but you are still too early. That is why it is called value stock, where after a few years, maybe that stock might break out and it might explode. But right now it is not doing anything because even market participants know that there is some time for that trigger to materialize. There is no point in just jumping there. Now, this blue dot which you see is where there is an inflection point. That is where the company is going from a dormant base stage to something called as advancing stage. This is what we call as stage 2 in our growth investing journey. And this is the stage which you want to actually ride in your investing journey. So now what happens is, suddenly there is a positive surprise. This company was not doing anything. Suddenly there is sudden growth inside that company, so everybody in the market has got surprised. Now traders and quant models pick up very fast because they see price volume action, and immediately there is some bit of more thrust and momentum that gets created. And after that there is earnings revision. A lot of these brokers who have been not tracking these companies, they start giving attention to it and they start revising earnings of this company. And as this happens, the company is continuously outperforming quarter on quarter on quarter. It's actually giving high growth rates in terms of earnings growth, and this is what is called as EPS momentum. This entire journey is called stage 2, advancing stage. So the first stage is called basing, where it is just flat, and then the lift starts, which is called advancing stage. Now what we do in TechnoFunda is we actually average up the stock as it moves in advancing phase, because we want to make sure that if it is growing and if my money is compounding, I can put more allocation and more money in that journey. Now please remember, if you want to make more money, allocation is one of the very important parameter in your investing journey. If you are investing and if the stock performs well, but if you are not allocated properly, then it is of not much of use. So please make sure whenever you get such kind of good stocks which are actually delivering the way you have thought, you should be backing it by huge allocation so that you can make incrementally great returns in your journey. Now that is the phase which you want to ride. And then there is a point 4 where everybody knows that this is a growth stock. Now it comes on media, there are a lot of research reports around it, and the valuation also has gone up. So remember what we discussed in the last video is there are two major engines of compounding that happens, right? First engine, earnings growth, which is what is happening here. The earnings is getting momentum and it is exploding. And the second parameter is valuation uptick. Now here what is happening, from point 1 to point 4, the perception of the market changes, because this company which was not performing earlier or did not have any triggers earlier have suddenly started demonstrating some powerful growth in its earnings. And if you want to check these things, you can go to multiple tools. Even a lot of these broker tools also provide it. So even if you check the Kotak Securities app or any other broker apps where you have been part of, you will be able to see the change in valuation also. Now there will be time where these growth stocks will stagnate, just like companies like Infosys were very great in the year of 2000 when .com was going on, and then the entire .com bubble bursted and the companies actually slow down in terms of growth. So whenever companies go into growth stage, after certain years the growth saturates, and many times that earnings actually lose the momentum. So there is a loss of momentum. Many times it could be degrowth also. and then it gives negative surprise to the market because people thought, hey, this is a great company, but then now suddenly they are seeing that the earnings is not growing, and then the entire reverse cycle goes on, and there is so much of selling that ultimately it goes below its fair value, and it could become a good value stock to re-enter again if we see that the growth is coming up. Now I'll give you an example around it. Company called as Eicher Motor in 2009-10, it launched its flagship model, if you see on the slide, which is called Eicher Motor Royal Enfield Classic 350. And that one model worked so much in favor of that company that in the subsequent years, if you see 2011, it grew by 42%, then 52%, 57%, 70%, and 68%. And meanwhile, it also launched a lot of new models like Thunderbird and Continental GT and Himalaya and so on and so forth. But what happened is 2017-18, the earnings actually started falling after that. Now, how to make sense of it and how to ride it? So what we do in TechnoFunda is we use these kind of blend of fundamentals and technicals. So once we know that fundamentally the earnings is growing, company is going on the right track, we take an entry into it. So let's say we have taken entry in 2010 over here, and then we want to ride it based on technicals, which is the stage 2 advancing phase. And this is how with one of my tool, I use Shaktiman 2.0, which is where I ride this kind of stocks until it becomes red. So this is a monthly chart, which means once in a month I want to check the core portfolio stock. I don't want to do it every single day. I don't want to do it every week. So once in a month I check it whether it is green or red. If it is green, I stay in. If it is red, I want to exit it. So this is how on a long term your technicals also can help you decide on entry and exit. So this is what happens. And if you think about the growth investing style of things, companies like Eicher Motor, when it was in its earnings momentum phase, let's say from around 30 rupees in 2009-10, it went all the way around to 3000 rupees, which means the company in 6 years multiplied by 100x. And that is where, if you use tools around technical analysis, it helps you also ride to a great extent these kind of compounding if you have done it correctly and if you understand the fundamentals correctly, right? So combinations of technicals and fundamentals can help you in taking decisions on growth investing also, and many times it can be a value buy also. So even if you would have bought this company in 2010, because the earnings growth is yet to come, even though the valuation that time might not be looking so attractive, but if the company is really able to grow at a good ROCE and able to reinvest its capital at a high ROCE, it might be a great compounding story going forward. So our aim is not to just focus on earnings, but also to ride such stories through growth investing framework, right? So this is a example of the entire framework, how we do, and you can go through this entire analysis which I've shown you. Just revise it further. Let me know in the comment section what were your key takeaways from this particular video, and next video we'll go and dissect it further to understand how to know which stage we are in, which stage to actually ride and which stage to actually ignore. So we are still going to go deep dive. I'll see you in the next video. Until then, make sure you write in the comment below how did you find this video. Thank you so much.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.